Good morning. Good morning. I can say good morning, but I can say good afternoon, good evening. It just depends on where you are and when you actually listen to this video. To the video. But before we get started with Brad Golder, who is with Evertree Insurance, and we're going to be talking about today 5 ways to pay less for your auto insurance. I just want to remind you that you can get a free copy of my ebook. You can get a free copy of my ebook and you can just put your phone up to the screen and it says ebook 50. The code is ebook 50, and the name of my audiobook is, well, the name of my ebook is Navigating Auto Loans with Bad Credit. Navigating Auto Loans with Bad Credit. And the reason I did this ebook was because I wanted to share information. I want to help you get into a vehicle if you have bad credit, or if your credit is in the toilet. I can help you get into a vehicle. I can walk you through the steps. Why not let me help you save thousands of dollars by reading my ebook? Without wasting money. So you can get my free ebook again. It is Navigating Auto Loans with Bad Credit. Put your phone up to the screen, and it is ebook 50 is the code, and it's in audio, and it is in English, and it's in Spanish. You can download it, or you can get the audio. You can listen to it in your car, or you listen to it at home, English and Spanish, and it's free. So today we're going to be talking to Brad Golder, who is with Evertree Insurance. And actually, Brad and I have had our partnership for at least, what is it, 8 years now, or 5 years?
It's been at least 8 years, maybe even more.
8 years, yeah. So just super excited to have him on this morning because just I just wanted to make sure we share information. As you guys know that I go live once a week. I'm sorry, 3 or 4 times a week, and it's called Pop Up with the Queen. And I hope everybody can hear us. But again, it's called Pop Up with the Queen. And today, again, we're going to be talking about 5 ways to pay less for your auto insurance. Let's go ahead and get started, Brad. Tell us a little bit about yourself, Brad.
Sure. So I've been with my company for about 8 years. We were called Provision Insurance, and Evertree Insurance. We're at about 12 and a half and Telegraph in Bingham Farms, Michigan. I actually work remote in Atlanta, Georgia now. I was in Michigan for a while, but moved down here about 2.5 years ago to Georgia, but I'm still licensed in Michigan. And I love sports. I was actually a sports broadcaster before I got into insurance. Did a lot of minor league baseball and college football, college basketball when I was a sports broadcaster. I have 2 kids. I'm married, and love watching sports, playing sports, golf, softball, and helping people save money on their auto insurance and help them get their homes and businesses insured as well.
So I appreciate you joining us this morning. And the reason that we're doing this broadcast today is that we want to be able to help you save money when it comes to your auto insurance. Too many times people come to me and they're driving a vehicle, but they don't have insurance, or they don't have a trusted individual or a trusted agent or a trusted person they deal with, even if they have automobile insurance right now. So one of the first things that I know that me and you always talk about is we always talk about how can we save a customer on insurance. And one of the ways that we can save a customer can save money on insurance.
Sure. I'll go a little bit out of order from our list
Yes.
that I've got, but I'm going to start with some of the things you can do before you go into the dealership. So this is one where it's going to help with the finance end on you, and it's also going to help on the insurance end. That's improve your credit. You can buy a car with damaged credit, as you've talked about before, and you can read about in the ebook. You can buy insurance with damaged credit, but insurance companies are going to rate based on credit. So the better your credit is, the better your rate's going to be. So going into the buying process, paying off some of those balances and reporting to the credit bureau that you've got those balances paid off. If you can get that score up, you're really going to help yourself in buying insurance.
Well, one of the ways that people really need to think about is when they're looking to buy a car. And we say that Brad is saying damage credit. I'm saying your credit's in the toilet and you have not paid your bills. But what is one of the ways that, I mean, how long should they keep their insurance before they shop it?
So another way you can really save on your auto insurance is to have 6 months of consecutive coverage. So no gaps in coverage, and no lapses in insurance. That's really going to put you on a preferred tier in the insurance business. There are a lot of insurance companies that will not write insurance policies unless you have 6 months of consecutive auto insurance. So how can you do that? So let's say you're younger and this is a first purchase. Maybe you're in your young 20s. You're buying your first car. If you can get on a family member's policy, that's a great way. Be on that policy for 6 months. Yeah, it's going to make that policy go up, help your family pay the difference to get you insured properly for 6 months. Show that you've got that 6 months of coverage, and you're going to have a better rate. Let's say you're buying a car and you're not, it's not a first time purchase for you. Put insurance on the car that you have, even if it's falling apart. The state requires, if you're driving that car, that you need to have liability insurance. So just the state minimum liability.
So Brad, what is liability insurance? So the people that don't know what liability insurance, what is liability insurance that on a vehicle?
So that's protecting you in the instance that you're sued. So if you are at fault in an accident, having that liability insurance is going to protect you. If you're insured, it's going to pay off the bills of the person that you've injured. If it's another driver, or in this state, most likely it's going to be a pedestrian or a bicyclist, somebody like that. Having that liability insurance is going to pay off all the damage that you caused based on an at-fault accident. You're required in the state of Michigan to carry a minimum of $50,000 per incident, $100,000 aggregate auto insurance. You do not have to have physical damage coverage for that car that you have. So people commonly call it no-fault insurance, but it's really just liability-only insurance. You've got that liability at the state minimum level. You've got the property damage at a state minimum level, but you do not have any coverage for the car itself. So if the car is in an accident, the insurance company is not going to pay for the physical damage of your own car, but it will pay for anything if you injure somebody and they call the Bernsteins or Mike Morrison, all the wonderful television attorneys we have in Michigan, then that's going to protect you from that. If you have that policy for 6 months, then you're going to have so many more options for all the other insurance companies are going to open their doors, and you're going to have so many more options for insurance at that point.
So what about the people like my mom, my dad, and maybe people's grandmother, even themselves, for the people that actually, we are so obligated to that particular insurance agent, whether it's State Farm, AAA, we are so obligated to them. What should we actually shop them? Should we shop our rates? Should we shop our homeowners insurance and our car insurance? Should we shop that once a year, every 2 years? Is that important?
Sure. Look, my best clients are clients that are unhappy with their insurance agents. So if you've got somebody that's happy with their insurance agent, there's a lot of really good agents around here. So if somebody's happy with their insurance agent, I don't want to break up that relationship. Mm-hmm. So if they're happy with their insurance agent, contact your insurance agent and have them reshop your rates. There are two different types of insurance agents. There's captive and there's independent. So we're an independent agency. That means we represent all kinds of different brands of insurance. Mm-hmm. So I'm appointed with over 20 different insurance companies that do business in the state of Michigan. And so an independent agent, if you've got a high rate with an independent agent, they should be pretty easily able to search the market and see if there's something better out there. If you're working with a captive agent, captive agents are working for some of the real big brands in insurance. State Farm, Allstate, Farm Bureau are three of the biggest in Michigan that work as captive agents. That agent is locked into that company. So if you don't have a good rate with them, you need to find another avenue to search the rate, because that captive agent is not going to be able to find the best rate. Sometimes they may have a one-off relationship. A lot of times Progressive tends to have relationships where they could sell you a State Farm or maybe a Progressive. They may have one option, but they're not going to have the 19 other options like an independent agent's going to have.
So what's one way to lower your personal injury protection coverage? And again, before you answer that question, what is personal injury coverage? Because like myself, I know what it is, but a lot of people, when they get the insurance, they don't know all the definitions. They just know they have to have insurance, but they don't know what is covered.
So personal injury protection is something that's pretty unique to Michigan, especially the fact that it's mandatory in most situations, and the limits are very high for personal injury protection in Michigan. It means that in Michigan, you have one of the best auto insurance policies that you can have. You got to pay for that too. So that's also why we have such high rates in Michigan. And so when I started in this business 8 years ago, everybody in Michigan had to have an unlimited medical personal injury protection. That was required for everybody in every situation. And the rates were high, and there was no getting around that aspect of the rate. I'd say maybe about 5 years ago, there was a change in that we could, as Michiganders, we could change what type of personal injury protection we have. And there's some ways that we can really save now on personal injury, on lessening or eliminating personal injury protection. Okay, so bear with me here. Best way is if you have Medicare. If you're over 65, or you're on disability, you have Medicare Parts A and B. You've got the red, white, and blue card. When I write a policy, if you want to be exempt completely from personal injury protection, you just turn in that card, send me a picture of it. We have you sign a form, and then you have no personal injury protection on your policy. Personal injury protection on the auto policy pays your medical bills. Mm-hmm. So you're telling the auto insurance company, I'm good on my medical bills if I'm injured in an auto accident. Mm-hmm. Medicare is one of the better payers. And so typically you're not going to have a lot of expenses if you're injured in an auto accident and you have Medicare. But it could lead to some gaps. If you have that zero personal injury protection on there, it can lead to some gaps. And those are gaps that you're going to have to fill if you're injured in an auto accident. You're going to have to pay out of pocket. Second way you can lower your personal injury protection, second best way is it's typically going to be an employer-sponsored health plan, although there are some private plans that'll do it, and they will provide a qualified health letter that says that they will pay if you're injured in an auto accident. And again, if you have that qualified health letter, it's not as easy as just turning in the card. You got to get the letter, but if you turn in the letter, then we can turn your personal injury protection to zero, and you can be exempt. The third way is not a full exemption, but if you have Medicaid, you only need $50,000 in personal injury protection, so we can lower that amount. That's going to lower your cost. And the fourth way is something that everybody can do. If you don't, the standard. So if you don't make a selection, the standard is going to be for you to have unlimited personal injury protection. Mm-hmm. But you can make a selection where you choose $250,000. Which would lower your personal injury protection. You can also choose $50,000, which would be the middle ground. But if you want to save and you don't have a qualified health letter, you don't have Medicare, or you don't have Medicaid, you can go to $250,000 for your personal injury protection.
So if a person doesn't have the qualified health care letter at the time of getting their vehicle, can they? How much time do they have to get if they get the insurance and they don't have the qualified health letter? Do they have 10 days, 5 days, 3 days? How long do they have to have that after they get the insurance to get that rate lower?
So they can do that at any time. So at any time during the policy, you can turn that letter in. you can, and that would prompt an e-signature, and you can get that qualified health letter in, and you can lower the personal injury protection. So, let's say you buy an insurance policy. A month later, you want to lower your qualified, your personal injury protection down to 0. Turn in your qualified health letter, get your signatures. If it's a month in, then you're going to have 1 month at the full rate, and then you're going to have 5 months at the discounted rate.
Do people, so, this leads to my question with this, because, we always, my assumption is that if you're older, if you're retired and you travel less miles, do you get some type of savings with that? Because I know when I first went to Progressive with you, I had a tracker on my car. Nobody knew I had a tracker on my car. But that wasn't the car I was driving every day. I was working at a Ford store, and I had a company car. So I had my car and my actual car that I was supposed to be driving every day in my garage, and I had a tracker on it. But they still offer the trackers on your vehicle so that they can monitor how many miles you can go to get savings?
Yeah. So every company, probably most companies do offer those. It's called Right Track. It's called Drive Smart. They all have these little nicknames, but and they used to be like a little device you'd plug into your cigarette lighter. Do they still call them cigarette lighters? I feel like that's a 19. But now it's pretty much an app that you would have on your phone. I recommend those to somebody that has a company car, and they just use their insured vehicle for pleasure. If it's a vacation car, or if they work at home, they're only just driving to the grocery store. Seniors, they're just going to the grocery store and church every week. Absolutely. Do one of those devices. Depends on the company. It could be maybe about a 3-month program where they track your driving habits, and that can really lower your rate. If you're a senior, in addition to being able to exempt personal injury protection because of Medicare, you can also exempt yourself from work loss if you're retired. So if you're retired, you wouldn't need money from your auto insurance to pay for the funds that you would lose for not working if you're injured in an auto accident. So that's something you can save on. And how insurance companies rate yours is vastly different. I've got one company, they've got an age cutoff where they, after a certain age, I think it's 75, they require an underwriter review as to whether or not that person is still a good risk.
Oh, really? Isn't that
some people love seniors because they don't drive that much. But some people find that they're more of a risk because slower motor skills, declining vision, those type of things. And I do find that, insurance companies rate based on date of birth. So, when you turn 16, that's going to be a super high rate because teen drivers are risky. We find that kind of extreme older population, the 90 plus, that they get rated really heavily, even though they're hardly driving probably.
So Brett, I got 2 questions while you've been talking. So one is, if they put it on an app now, far as following you, is that better? Because I know when I install a new app on my phone, they want to track me, and I say no. So if the app is on your phone now instead of in your cigarette lighter or in your vehicle, why? I mean, that's like being able to monitor you whether you want them to or not. So is that I don't know. I don't know if I'm comfortable with an app on my phone.
Yeah, if people aren't comfortable with it, I do explain it, and I don't want people to not be comfortable. And I think it's really just how much do you value the possibility of savings versus the privacy intrusion that an app's going to have. Okay. And again, it's if you're not driving much, if you're working from home, you may sacrifice that privacy for 3 months in order to get that better rate. But if it's something you're not comfortable with, then then don't do it. But it is a way for the insurance companies to know how you drive. And some people get that device and don't even think about it. And they fly around, they slam on the brakes. They drive at 3 a.m. and all those things that the insurance companies don't like, and then they get a higher rate at renewal. So, if you're a good driver, I think it's a good tool to use. But I don't recommend it for most clients, because most clients do drive, quite a bit. There's a reason you bought the car in the first place, is you want to enjoy
it. To drive it, right?
Yeah, exactly.
So if you're 16 years old, I know when I was 16 years old, the question was asked to my dad by the insurance company, are you going to add your daughter to your policy? Now, is it still the same way, or do they still just automatic? Do they still just add you, or do they still, if your parent has an accident in the vehicle and they're not on the insurance, and you said they didn't live with you, how does that work now? Because they automatically added me to my dad's insurance, and then when I got a couple of tickets, AAA automatically banned me from being on his insurance.
You got that lead foot.
Banned. I did.
So here's what happens. So if you're turning 16 and you got a kid that's in the house that's turning 16, mm-hmm. And they are going to drive, then they need to be listed on the insurance. They don't need to be listed while they're still learning. The learner's permit does not allow them to drive by themselves, mm-hmm. Unaccompanied. So they just need to be listed on the insurance while they're, when they turn 16 and get a driver's license. And from 16 to 18, they can't have their own policy. They've got to be on a parent's policy. You got to be 18 to have an insurance policy. Here's what I do not recommend. I do not recommend you have somebody in the household who gets a driver's license, but you're not ready to have them drive yet. When they get the driver's license, you need to be prepared to pay as a parent to put them on the auto insurance policy, because these insurance companies have gotten smart and they've been coordinating with the motor vehicle registers, the Secretary of State. So we get notices a lot of times that, hey, Susie Smith, 2007 date of birth, just got a driver's license. Contact the client if they need to be added to the policy. And sometimes they just add them if they don't hear anything. So that person, when you do not get a driver's license unless you're prepared to make that addition onto the insurance, the young driver is going to raise your rates, even if you're not adding a car. One way you can save is that if that driver has a 3.0 or better GPA, get the good student discount.
Wait. So you're saying if your student is your child is 16 and they have good grades and they're smart, they're going to get a savings for that?
Yeah, 3.0 is typically the standard. Some companies will allow if they're on an honor roll or anything else, but mostly, if they've got a 3.0, and it's something as a parent you can use to hold it over your kid's head. If they've got that 2.9, say, hey, you got to get a 3.0 if you want to get a driver's license. We're not going to go there until you get a 3.0 because it's going to be more expensive. I don't know if driver's ed is required or not for kids. If you have a driver's ed certificate, a lot of companies will give you that discount for doing driver's ed. And you brought up something earlier. What happens if the kid is not on the insurance policy mm-hmm. and wrecks the car? Mm-hmm. They're not paying. The insurance company is not going to pay because you are obligated as the owner of the insurance policy to put all resident drivers on the policy. So if there are resident drivers in the household, they need to be added to the auto insurance policy. If you have kind of a multifamily household, you can have two policies. They can have their own policy. If an uncle and a kid are living in the basement, and they can have their own policy. But if they don't have their own policy, they need to be listed as as an owner of an insurance policy, you can have guests drive your cars. So it's okay if the teen next door drives your car, but if the teen that lives with you drives your car, they're not going to pay for it.
So that you know what that's I'm glad you brought up that point, because that's just like if you lend your car to someone, then if they drive your car and you're not in it, they're covered because you gave them permission, as long as they don't live in your household, correct?
Right. Exactly. You got family coming in town. They can use the car. That's fine. Just as long as they don't live there.
Okay. So what about, me and you were having this conversation, I believe a couple months ago, and I was talking about maybe like a year and a half ago, I got a ticket. And, I remember doing this when I started getting smart on this when I was in my early 20s, right? When I still had the left foot. And, I figured I had to get to AB real fast, faster than anyone else, right? And I would go to court, just like I did a year and a half ago, to actually ask for forgiveness with my left foot, or me running a stop sign. So asking for forgiveness, going to court and getting your points, asking, can you just pay your ticket to get your points waived? Is there a way that the insurance companies are still being able to see that actually you did get a motor vehicle, get a ticket and hold that against you?
Normally what we'll see is we'll see if you plea it down, like let's say it's a 20 and you plea it down to you're going 20 plus, and you do a plea and it goes down to 1 to 5, or I'm trying to think of the language that they use for like just the simple violation. But it's gonna help you. Insurance companies all look at the points differently than say the state of Michigan does. But anytime you can lessen the impact of your violation, the better. So, one company may weigh heavier if it's 15 or more over. One company may weigh heavier if it's 25 or more over. But getting it down to just speeding 1 to 5, or speeding generally, or some sort of non-moving traffic violation would be even better. Anything that you can plea down is going to help your cause, because it's better that the weight of that violation is a 0 or a 1 in the insurance company's mind, rather than a 3 or 4. But every company's different. Every company is constantly changing how they weigh that kind of thing. You see some companies where the first violation in a 5-year period is 0, but the second one, they're going to start weighing the points. You see some company weighs it over a 5-year period. Some companies only weigh the last 3 years of driving record, or the last 2 years of driving record. So it really just depends on the company, but anything you can do to lessen that charge is going to be better for you.
So what are ways to actually save on your auto insurance? Because I hear you telling my customers that all the time. Because one thing, what I do, been in this business for 26 years, almost 27 years, I always have my go-to people I deal with. And I have one of my go-to people is Brad Golder with Evertree Insurance. And the reason I have my go-to is because I just want to make sure that you are getting the best deal and that you're able to afford your insurance, but also find out some ways to save insurance. I'm all about savings, right? Because when you come to get a car from me, maybe your payment's higher than what you think it should be because of credit. Or even if you don't have your credits in the tall, or you have Bruce credit, but maybe you got great credit and you just need to shop your insurance agent, shop your insurance. So I'm always referring people to Brad. But how can people actually save when it comes to the insurance?
Sure. So I've got a 5-step plan to save on your auto insurance. We've talked about 3 of them. Improve your credit, have 6 months of consecutive coverage, and then lower your personal injury protection. The 4th is to raise your deductibles. You should have your deductibles at the highest amount that your loan will allow, which is typically $1,000 for comprehensive and collision. That's going to save you on your monthly payments. I would encourage you to take that savings and put it into a rainy day fund just in case you do have to make a auto insurance claim, that you do have money available to pay those deductibles. But I would definitely set it at the insurance company less and only pay, the higher, only pay when you need to make a claim. And the final thing is to bundle. Insurance companies like to see clients who have 2 or more lines of business with them. So if you have homeowners insurance, try to get your homeowners insurance with the same company. There are certain situations where it just may not work. But if you own a home, own a condo, get your insurance with the same company where you have your auto insurance. At least price that out. If you don't own a home or a condo, and you're just renting, renter's insurance is extremely cheap, and renter's insurance is probably the best way to save money on your auto insurance because you don't have to pay much for renter's insurance. I've had situations where I've gotten people renter's insurance for $12 a month, and they've saved $30, $40, $50 on their auto insurance. So the math makes more than sense when you bundle with renter's insurance. So those are all things that that you can do to try to save money on your auto insurance.
So let's dive right into this. Our last point here when you talk about renter's insurance, because a lot of people think that when they're renting a house or they're renting an apartment that they got coverage on their goods, on the things that they own in the walls of their apartment or condo or home that they're renting. What actually does that actually cover when you get renter's insurance, Brad?
Sure. So the landlord's policy covers the building, and it covers everything that the landlord owns in the house. So it could be the washing machine, dishwasher, those kind of things. But everything that you own in that house is not covered by insurance. So, you have an overnight fire, you have storm that comes through and renders you homeless. Not only do you not have a place to go, but you just lost all your stuff. And typically that stuff is worthless individually, but collectively is a big expense. You're going to have to go and buy all new clothes, all new kitchen stuff, all new furniture, and you got to buy it at new prices because you don't want used stuff. So a renter's insurance policy just covers the stuff. A minimum policy is about $20,000 in coverage for your belongings, and it covers temporary housing. So you just lost your place. You probably need maybe 2 months in a hotel to get you back up on your feet. It's going to pay those expenses. And again, a renter's insurance can be as little as $10 to $12 per month. And you're going to get a big discount on your auto insurance by purchasing that policy.
So real quick before we get off here, I need you to do this for my 30-second videos that I put across social media. Can you give me the 5 ways to actually pay less for your car insurance, and just give me a quick snippet on each one?
Sure. Here are the 5 ways that you can save money on your auto insurance. Number 1, lower your personal injury protection. This is the best way is if you have Medicare, or if you can get a qualified health letter from your employer's health insurance plan. Number 2 is to improve your credit. Insurance companies rate based on credit. So the better your credit score is, the better your rate's going to be. Number 3, raise your deductibles. I would set your deductibles at $1,000. Most loans, finance companies, and lease companies will allow $1,000 deductible. Number 4 is to bundle with your home insurance. Whether you own a home or condo or you rent, you can get renter's insurance. Bundling a package of auto and home insurance is going to save you money. And then finally, to have 6 months of consecutive coverage before you buy an auto insurance policy. That's going to help you as well. Insurance companies want to see that you have been covered when you owned your previous car. So want to see 6 months of consecutive auto insurance coverage.
Well, thank you, Brad. What we're going to do is, because I had problems putting the names on top of, the names, Brad name on the top of the screen, I actually was playing with StreamYard a little bit, so I kind of messed it up. But Brad, when we get off here, I would like you to go to the pages that I told you that I was on, that we're live on. It's not going to be live, of course, when we go off on my personal page, and then Regina, the Queen of Carolones at Joe Longham, which I think you follow. Just go in and put your name and put your card in there, so someone that watches it can reach out to you. I know that I've been dealing with Brad about 8 years, and I recommend Brad to any of my customers. So if you're looking and you just want to get a quote on your car insurance or your auto insurance, your homeowners, and you just want a quote, it's free. Why not see how you can get some savings? And then remember Brad talked about the difference between a captive insurance person. Is it captive, right? Is it called captive?
Captive, yep.
Is it captive insurance?
Right? Captive agent and an independent agent.
Okay, so a captive. Brad also talked about the difference of being a captive agent and an independent agent, and it's important to know that because Brad is an independent agent, which means he shops 20 different insurance companies for you. And why not get that done for free to see if you can get a little bit of savings on your insurance? It doesn't hurt. I was with Progressive Insurance from 2018 until this year. I think my premium was up in, I think it was June or July, right? And then now I'm with Safeco, and I was dedicated to Progressive. But once I found out that they were going to take my insurance rates up, I left. Brad found me Safeco. Safeco actually, they gave me the same rate as Progressive did. Now I don't know what it's going to be like a year from now, but I'll have to deal with that then. So again, Brad's going to put his card in the comments in the bottom. So you guys get Brad a call, get a free quote. Brad, thank you for joining us, and I'll talk to you soon.
Thanks, Queen.
Hey, you got to get TikTok. You got to get TikTok because we got to pick a day where me and you go live on TikTok, because TikTok has an audience, viewers and followers in different states. I mean, all over. Versus, here you gotta kind of bring people to your social media platform, but TikTok all over. All right, Brad, thank you. Have a great day.
Bye, Regina.
Bye.